Hello, this is Kelly Page. I'm a Regional Outreach Coordinator, and this Monday module's topic is about tax changes that have happened recently that may impact OHP applications. So the purpose of this module is to give you a summary of the tax code changes that passed in December of 2017. Some of them didn't kick in until this year. But all of them directly impact the way income is counted by the IRS. And hopefully understanding these changes will help you submit more accurate applications. I have to warn you that our one system has not caught up with all these changes, so the system may allow your clients to still input inaccurate information. But I would advise you to fill out the application the way the tax law says now. Okay, so some things have changed that affect modified adjusted gross income, otherwise known as MAGI, and that determines eligibility for the Oregon Health Plan, CHIP, the Children's Health Insurance Program, and the marketplace plans sold at healthcare.gov. These are called qualified health plans. So one change in allowed deductions. These changes will affect the expenses section of the application. Moving expenses are no longer deductible for anyone except for active duty military who are moving to a new permanent change of station. So that will probably not be a lot of your clients. It used to be deductible for everyone, now it's just active duty military, and that actually kicked in last year. School tuition and fees can no longer be deducted as of 1/1/2018. So if you're, please don't enter them for this year. Student loan interest deduction still exists, but it's kind of complicated. Clients should check to make sure they qualify. The IRS has a good publication, 970, which is about education, and I urge you to look at that. Another change in allowed deductions. This change will affect the expenses section of the application. Alimony and separate maintenance payments are no longer deductible for any agreement or divorce executed or modified after December 31, 2019. So if your client got divorced last year and had an alimony agreement, it's still valid unless, as an expense, unless it gets modified. And then if an agreement is modified, it kicks into this new rule. So as it affects expenses, it also affects changes in taxable income. And so alimony has been an entry in other income section of the application, but alimony and separate maintenance payments no longer count as other income for any agreement executed or modified after December 31, 2018. I'm sorry. Okay, another big change has been the limits on dependent income. So actually starting last year, a single dependent under age 65 is not required to file a tax return if earned income is under $12,000, and that's way up from the previous limit of $6,350. This income should be reported but should not count toward MAGI, OHP, CHIP, or marketplace eligibility. If we're told that the system will winnow this out and not count it, if that's not your experience, please let your ROC know. The tax filing limit for unearned income for dependent income did not change. So this would be interest, capital gains, survivor annuities, things like that. A dependent must still file taxes and report if unearned income exceeds $1,050. So the forms have changed a lot from what your clients were used to, and I'm sure they found that out this year when they were filing. So the IRS 1040 changes to adjusted gross income section. It used to appear on the bottom third of the first page of the 1040 form, but now it appears in something called Schedule 1, the 1040 Schedule 1. And I give you a link here. You can go look and see what the new form looks like. So that's the new 1040 form. You can see it's much smaller. And then there's a second page that also has some stuff on it. So it's like 2 half pages instead of 1. The new Schedule 1 contains self-employment and other income entries and all the deductions which are allowed in the expenses part of the OHP application. And there's a link to that. It's kind of what it looks like. So your clients would be putting in on their taxes any additional income, which would often pop up as other income, and then adjustments to income, which, like I said, are the only things that are allowed in the expenses section of the application. Another change this year, starting January 1, is no more individual mandate penalty. So this was, a big provision of the Affordable Care Act when it was really introduced in 2014. The law still requires everyone, with some exceptions, to have health coverage, but the federal penalty for not being covered is now $0. So this change is effective for tax year 2019. The penalty was still in place for tax year 2018, and people are currently filing if they had an extension. I think the drop dead date was April 15th this year. This has no impact on OHP eligibility or process, but just to let you know that there is no penalty now. Sometimes people used to like to say that they had previous medical expenses even when they didn't have them, so it would stretch out the time that they had coverage. That's not a worry for anyone anymore. 1095 tax forms A, B, and C. These are the tax forms that everyone who had health care coverage in 2018 should have received. Clients don't file these forms with their tax returns, but they're evidence of coverage. So I'm not sure if these will be sent out next year, but they were sent out this year. So tax form A was for people who had marketplace coverage. B was for people who had coverage through Medicaid or Medicare, or any other coverage not from the marketplace, which is Form A, or an employer, which is Form C. So Form C went to people who had coverage through an employer. As I was kind of looking through to see these major changes, I found some really good resources. Excuse me. Health Reform Beyond the Basics is a great website. They've got a lot of good archived webinars and, information on taxes, income, and households that is understandable. I really like their materials. So that's their website. And one of the great things that I've been using since 2015 is the Healthcare Assistor's Guide to Tax Rules. It gets updated every year, explains the tax provisions of the Affordable Care Act, and it talks about changes for Medicaid and for the marketplace. So this is a really good resource. Health coverage and your federal taxes is available at healthcare.gov, which is the federal marketplace. And it's kind of a nice little summary of things. Of course, the ultimate authority is the IRS, and they have a publication called Tax Reform Basics for Individuals and Families. Might want to take a look at that. Self-employment is a really gnarly topic. We have a lot of interesting scenarios with our clients, sometimes with self-employment. There is a, very comprehensive resource on this at the IRS. And if your clients don't know about this, they should probably know about it if they are self-employed. Social Security income, this is a topic that causes a lot of confusion. IRS has a really good FAQ on Social Security income. So there's 3 types of Social Security income. There's Social Security, which is retirement and survivor's benefits. There's Social Security disability income. And both of these are reported on both OHP and Marketplace applications, the full check, basically. However, supplemental security income, which also comes from the Social Security Administration, is not taxable and should never be reported on the standard OHP application. Okay, that's what we have for the major changes and the resources. And if you have any questions, please be sure to contact your ROC. And thanks for listening.